Most homeowners are sitting on a life-changing amount of money right now, but they're completely frozen. Why? Because they're staring at the wrong number. You might be tracking current mortgage rates, thinking there is absolutely no way you can justify selling your house and buying a new one in today's market. You're missing the point. There's a massive gap between what you think your home is worth and the actual cash you'll walk away with at closing. If you're planning a move in the next 6 to 12 months, letting interest rate anxiety blind you to your true net equity is the fastest way to lose your leverage. I see this exact hesitation playing out all the time. When you look at your home simply as a low monthly payment, you treat it like a liability you're afraid to lose. It isn't a liability, it's an asset. In our local market right now, home values are holding incredibly strong. If you bought your home even just 4 or 5 years ago in towns like Mahwah, Wayne, or right here in Oakland, your equity hasn't just grown, it's compounded. The question isn't whether you should abandon a great interest rate. It's whether the cash trapped in your current walls is enough to rewrite the rules of your next purchase. Here is where this gets tricky. Most people calculate their moving budget by looking at online estimates, subtracting their mortgage balance, and assuming that's their down payment. On the contrary, you need to view your equity as a tool to offset today's borrowing costs. When you have enough equity to put down 30, 40, or even 50% on your next home, the current interest rate matters significantly less. Why? Because the balance you're financing is dramatically smaller. Now, here's the part you might not be thinking about. If you wait for interest rates to drop before you make your move, you're trading a financing problem for a fierce competition problem. The moment borrowing costs tick down, a wave of sidelined buyers will flood the North Jersey market, driving purchase prices even higher and wiping out any savings you thought you were waiting for. Your greatest leverage exists right now while inventory is tight, buyer demand is steady, and your current home can command top dollar. You don't need a perfect market to make a move. You need to understand how much trapped cash you actually control so you can dictate your own terms. If you're thinking about selling in the next 6 to 12 months, let's look at what waiting is actually costing you before local prices shift even further. Let me give you a quick example. I once worked with a couple who felt stuck in a home they had outgrown. They were deeply attached to the 3% rate, convinced that moving would destroy their monthly budget. When we actually sat down and ran the numbers on their home, looking at recent local sales, they discovered they had over $400,000 in clean equity. By taking that cash and putting it directly into their next purchase, they bought a larger home with a pretty small mortgage. And guess what? Their new monthly payment was incredibly manageable. Problem solved. The anxiety you feel about moving usually disappears the moment you replace vague headlines with real, verified numbers. You don't need to wait for the economy to change to figure out your next step. Real estate decisions should not be based on fear of what you're giving up. They should be driven by the actual financial leverage you have earned. Once you know exactly what you'll net from your sale, the path forward becomes a matter of strategy, not guesswork. The key takeaway here is simple. Stop letting the interest rate on a house that no longer fits your life dictate your financial future. Your housing needs change, and your equity is the vehicle designed to fund that change. Before you make a major move based on assumptions or neighborhood rumors, let's look at what's actually happening in your specific situation so you can preserve your timing, your leverage, and your options.